What are the most climate friendly types of lending versus the most harmful types of lending, and how do they look?
Let's start with the harmful side of the equation. And there are lots of different harmful activities that banks finance, right? Deforestation, for example, unsustainable agriculture practices. And we're very conscious of these activities. But we at Bank Green, we're really focused on the energy transition. And I think it's useful to, first of all, discuss what does the fossil fuel supply chain actually look like? The first stage in that process is exploration. Fossil fuel companies obtain licenses to extract fossil fuels, then proceed to actually doing the extraction, processing, and this is known as upstream activities. Then we have transportation of these raw materials through the pipelines, also construction of pipelines, treatment of these products so they could be turned into products that ultimate consumers could buy, and these are midstream activities. And then we have onward distribution through petrol or gas stations or utilities delivering gas to our homes. And these are downstream activities. All these stages have different amounts of emissions and therefore also different capital needs. So upstream activities such as extraction and processing are by far the most carbon intensive, but also most expensive, right? If we think about these harmful activities, the most egregious one is what the industry has termed as expansion. So that's build out of new infrastructure, actually funding new oil fields, for example. And in our methodology at Bank Green, we are hyper-focused on this activity of expansion, and banks and financial institutions that finance new exploration and expansion activities automatically get the worst, the lowest rating. And then turning to the beneficial side of the equation. So we have banks that just do not fund fossil fuels. There's a bank in the UK called Charity Bank, and that's all they do is they fund charities, right? So passively do not fund fossil fuels. Now, there are others, those that may promote a range of green consumer products. So this would be preferential interest rates for purchase electric vehicles or special mortgages for energy efficient homes. And then the gold standard, lending to support the clean energy transition, commercial funding of utility scale renewable energy projects. So this could be large solar farms or offshore wind farms, or on a smaller scale, community solar energy, which also has community resilience benefits. So good examples of banks would be Climate First in the US or Metro Bank in the UK.